We want to now take a closer look at the currency trade. For that, we bring in Brian Dolan, Chief Currency Strategist at Bain Capital and author of Currency Trading for Dummies. Brian joins us from his office in New Jersey. Welcome.
Good afternoon, Lori.
Okay, so as we watch this global stock sell-off, do you agree with consensus? People are going to go to dollar-yen, or they are rather going to the dollar-yen as safe haven bets?
Well, that's certainly one of the natural correlations that we've been following that's been dominating the markets over these last several months. And with the equity markets coming off, basically the risk appetites are taking a turn for the worse. You're seeing the dollar come back, and the yen crosses, the carry trades, those also get hit. But I think dollar-yen is also, I think, a buy on weakness. Overall, we are still looking for a higher dollar later this year, into next year. And I think using weakness in the low 90s is a good opportunity to buy dollar-yen.
So then that recent dollar selling was overdone. How much?
I think pretty extremely, and that's why I think this move still has some more room to go. If you look at what positioning and sentiment indexes, the dollar bearishness was at such extreme levels, about 96% bearish on the dollar, bullish on the euro, bullish on the pound, bullish on the Canadian dollar, and I think the position unwinding has some more room to go.
So are you convinced this is an actual turnaround for the dollar?
It is. I do have to temper that and remember that we are still in a summertime market and waiting for a break of the ranges. But at the minimum, I think we just tried the upper level of the euro's recent range. Once we drop under 140, we'll go down and we'll test the 137, 138 range lows. And then if we can get a breakthrough there, then we see more dollar strength.
So the dollar-euro isn't in danger of hitting 150?
No, not anytime soon. I think we put in a significant euro top. The Europeans certainly don't want to see the euro strengthen any further, and I think 145 is the maximum that we'll see this year.
Treasury yields obviously have come way down the last couple of days, so characterize the influence yields are having on the value of the dollar.
Very much, certainly against dollar-yen. And there, I think what I think is happening is that we've got a floor in place for the Treasury yields. I don't think we're going to see much below, say, 3.25, 3.30 on the 10-year yields. And that suggests that there's also a bottom in place or nearby for dollar-yen as well.
And there's also this talk of our dollar moves based more on risk appetite or fundamentals. What do you think?
It's a combination of two, but certainly right now the dynamic is one where when risk appetites worsen, the dollar does better. When risk appetites improve, the dollar weakens. I think one of the other moves that you're likely to see are some more significant reversals in the commodity currencies, and there I'd be looking for a lower Australian dollar and a weaker Canadian dollar. They've been some of the more popular currency trades over the course of this year, and I think their popularity and the positioning in those currencies relative to the size of the market is what's likely to see those pairs give it up the most.
Giving up the most, meaning those commodity currencies, how much could they give up? All that they've gained?
Well, not all that they've gained, but I think we can see in the Australian dollar back down to about 70, 72 cents. The range low for the summer has been around 77, so we need to get under there first. And then for the Canadian dollar, the range high has been about 113 to 115, but I think there's more room up to maybe 120 in the dollar against the Canadian.
Okay, so in this climate, in this deleveraging of risk appetite climate, what could be bearish for the dollar right now?
A much more prolonged downturn. Oddly enough, just as I think what we're going through, it's a bit odd in the timing. We've had a sentiment-led rally in risk assets, and the fundamentals on the ground are just now starting to catch up to where that sentiment has been. But oddly enough, sentiment is now in the process of pulling back, and I think we're going to need to see some much sharply weaker U.S. data to see the dollar weaken.
Brian Dolan, Chief Currency Strategist at Bain Capital Group. Many thanks for your time.